Yo, 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 it is your host with the most KDK Capri, and you're back at the, home edition of the Wealthy and Healthy podcast where we talk about all things health, we talk about all things business, excuse me, we talk about all things credit. Today I want to talk about breaking down the consumer report. What is your consumer report, aka your credit report? So we're going to be talking about how to manipulate the system and boost your score quick. Like, this is going to help you guys understand how to start fighting against the bureaus and how to start manipulating your score, fighting against the computers, and understanding what data points to hit to where you can not only never get denied, but you can also be 10 steps ahead and be ahead in the game, right? So to where you can just ensure that you are doing exactly what you need to do to get where you want to be credit wise and financially wise, right? So let's talk about breaking down the consumer report, right? Because when we talk about credit, and if credit is what's holding you back, this is the video that you need to be watching, right? Because you're going to learn what you need to do to get your consumer report shaped in the way to where you can go get funding. Or you're going to understand that you as the consumer have the power, again, because this is the credit and because this is the credit and empowerment challenge, right? For all entrepreneurs, this month is going to give you everything that you're going to need to start to fix your credit and to, just keep going, and how to leverage your credit, how to use debt to create income, right? So if this is what's holding you back, if funding and credit is what's holding you back, this is a video you need to be watching, okay? So let's talk about breaking down your credit score. Okay, when we talk about the credit scores are fluid, meaning they change based on our actions, so they can be manipulated. Now, when we talk about, and I know what you're thinking, how can we manipulate them, right? First things first, we want to understand that we're fighting a rigged system. We're fighting a computer. Okay. If you've ever seen AI, or you've ever been on, say if you call some type of customer service and you end up getting so tired or done with the AI that you're like, can I just speak to a person? This is the type of system that we're fighting. We're fighting a rigged system, and we're fighting a computer-based system to where we have to check certain type of data points, and that's what contributes to us getting approved or denied. Okay, so I'm going to show you what formula the banks use and how you can manipulate your score to where you can essentially never be denied for funding, to where you can always take the power back as a consumer and say, hey, I don't want this on my report, or say, hey, I demand this to be removed, and we can start leveraging our credit, right? So the banks use a formula, right? You can influence your score and manipulate your score and manipulate the system, and you can get faster results. So let's talk about how to do that. First step to doing that is breaking down your credit score, understanding your credit score so you can understand how to attack certain things, and you can understand what needs to be attacked first. What's going to be the easiest things, and that's what you want to attack first. The second thing you're going to worry about is what is the biggest things. Like, okay, so first thing we're going to talk about is payment history, right? This is one of the biggest things that you're going to have to understand when we talk about your credit score. And when we talk about payment history, it's 35% of your credit score. Most people think that this isn't as important as it is. This is arguably the most important factor of your credit score. Okay, so your payment history is important, whether you have good payment history, meaning you pay your bills on time, or you have bad history. Okay, meaning you have late payments, right? So late payments typically are going to lose you 100 plus points on your credit report, on your consumer report. Okay, one late payment is equal to up to 11 positive payments. That means if I'm getting my payment history reported every single month, and I get one late payment, it's going to take me over 11 months. That's almost a year to get those points back from the late payment, the points that I lost from the late payment, right? So late payments are extremely detrimental. So that's why you always hear people like, pay your bills on time, pay your bills on time, right? But if you get into a situation where you got a couple late payments, here's what you can do. You're going to do number one. You're going to dispute until you can pay. So send out those letters. If you don't have the money to pay for it right now, I would say send out those dispute letters. But here's the one thing that I want to say. If you have $150 that you need to pay off on the credit card, pay the credit card off, okay? Don't send the dispute letter and take all the and waste your time, or even if you do get it removed. Say if it takes you, this is going to take you up to 30 to 60 days, minimum. Okay, so dispute until you can pay. If it's $150, pay the $150 off, because it's going to take you about around that much to send out certified mail, and sometimes you're going to need to get it notarized, right? You're going to have to take a lot of time out instead of just paying that $150. Okay, now if you have 20 late payments, or you have late payments backed up and you need to get them removed now, you need to manipulate that system and you want to boost your score quick, dispute until you can pay. The next thing you can do is you can send a Goodwill letter. Now, what is a Goodwill letter? So a Goodwill letter is all about communication. If you communicate with your bank and you can let them know, hey, I'm trying to work with you, can you work with me? They're 100% going to at least hear you out, right? If they say, hey, we can't help you out, we're sending this to collections, then you did all you can do, right? But a Goodwill letter is essentially saying, I'm communicating with you. Can and there's different type of ways you can craft it. But say, let's go back to the explanation. Okay, so say you want to get that $150 removed, right? Or you want to get that late payment removed. Okay, so what are you going to do when you send your Goodwill letter? So you're going to essentially craft a letter and say, hey, can you work with me? I have $30 for the minimum payment. Say if I pay, but this is the thing. When you want to send a Goodwill letter, you want to extend that hand. So you have to have some type of leverage. So say I want to pay, if the minimum payment is $30, say I have $90, say, hey, I want to pay this month and I want to pay 2 months in advance. In exchange for that, can you take this late payment off of my report, off of my consumer report? Most times they're going to work with you, especially because you're reaching out. A lot of people just are going to, when they hear the bank calling, they're going to press decline, press decline. Now, if you answer the phone and you say, hey, I'm working, can you work with me? I want to work with you. I want a good relationship, a healthy relationship, like we talked about last episode. Credit is all about your relationship with your finances, right? So if you have a good relationship and you send out these goodwill letters, you're building that relationship. You're staying loyal and letting them know, hey, and I might be in a certain type of situation right now. Can you wait until next week and not report it as a late payment, right? Say I get paid next week, or say I had something going on this week, or my kids going back to school, whatever the case may be. Voice that to them and say, hey, I'm setting this in Goodwill. Can you work with me and not report this, or can you remove these payments in exchange for X, right? The next thing you want to do is just catch up on your payments, right? If you can afford it, catch up on your payments. If you can't, dispute until you can pay, right? So one way to just never have to deal with any of this is always pay your bills on time. I understand we, as Americans, right, as regular people, we sometimes can't pay the bills on time, right? We have certain type of things that we got to deal with, right? But if you can afford it, you shouldn't be taking it out. But if you can, always pay your bills on time, right? This is very important. It's extremely important, right? Because your payment history is 35% of your score. This is extremely important. This is what is going to make or break your score. Okay, so the next thing we're going to be talking about is credit utilization. Now, what is credit utilization? Credit utilization is how much of your limit you are using. Okay, how much are you utilizing? So say I have $1,000 credit limit, right? Say I use $100. That means I'm utilizing 10% of my credit limit. So this is a percentage, right? So your percentage is going to be whatever percentage. Okay, so if I use $300, then I'm at 30% credit utilization. Okay, so this is going to fluctuate, right? This is what fluctuates the most on your report. This is what makes your score go up and down, up and down. Sometimes you'll see it go down 25 points. If you use Credit Karma, you're going to see your score fluctuate almost every day, right? Because it all has to do with the actions that you take every single day, right? So how can you manipulate your score? First thing you want to do is make sure you're paying before your statement closing date. What is your statement closing date? So usually when you have a statement closing date, it's going to give you, when you get your bank statement, right? Or when you get your credit card statement, it's going to give you all the activity of the last 30 days. Sometimes it's 20, usually it's like 25 to 28 days, right? So you want to pay before the statement closing date. You all are going to find your statement closing date when you log into your bank or you log into your credit union or whatever, however you track that spending on your credit card. You can also look into your credit, whatever you signed when you first started, when you took out the credit card, right? You always are going to sign certain type of agreements where you're agreeing to giving the creditor, you're signing with your promissory note. So that's essentially saying that you're giving the creditor permission to run your credit or to use your signature to create credit. Okay, so make sure you're paying before your statement date and not just the due date. So you want to pay a quick hack is what you, okay, so always make sure you're paying before your statement closing date and not just the due date. Okay, so you have a minimum payment date and you have your closing date, right? Your statement closing date. Okay, if you pay before the statement closing date, which is typically before the due date, okay, that is what's going to get reported to the bureaus. If you make the payment on the due date, that's essentially what's going to let the creditor know, which is like your bank or your credit union, whoever lends you the money, that's what's going to let them know, okay, she made the payment. Okay, so try making your payment before the due date so it can report. Okay, you can always change your pay date. You can always push that back. I don't care what type of credit cards you have, you can change your payment date. I mean, it's not how you balance out your credit. And this is how you balance out your credit and this is how you balance out your finances, okay? Because if you pay before that date, you can essentially create some type of cushion, okay? And it's getting reported. And another thing I want to talk about, credit utilization. When we talk about credit utilization, you not only want to stay between 10 to 30% utilization, but once you pay that down before the statement date, that's going to boost your score, okay? But if you are over 10 to 30%, this is going to lower your score. Okay, so if I have that $1,000 credit limit and I know 30% of 30% of 1,000 is 300. So if I'm going over 300 and that's what's getting reported before the statement date, my score is going to go down. And that's essentially what I'm going to start paying interest on. If you have a balance that carries over, that's what you pay interest on. Okay, so not only do you want to make sure you're between that 10 to 30% credit utilization before your statement closing date, you also want to make sure you never make late payments. If you do make late payments, get them removed immediately. Okay, if you do have any type of late payments, this is going to be detrimental to your score. And credit utilization is very important. This is what is going to make your score go up and down, up and down, up and down. It essentially changes every time you swipe that credit card. Okay, so pay off your card multiple times a month. This is like the biggest credit hack you can have when we talk about boosting your score organically. So pay off your card multiple times. One thing I like to say is pay your one thing I like to say is pay your minimum payment date and then pay 2 weeks after. Now, if your minimum payment date is at the end of the month, then you want to make sure that you make that other minimum payment. You're making the extra payment 2 weeks before, right? So if I say my payment date is on the 21st, right? So say that's when my minimum payment date is. So I know I can't wait another 2 weeks after I make the minimum payment. So I'm gonna do it 2 weeks before. So I'm gonna do it on the 7th. I'm gonna make a $30 payment on the 7th, and then again on the 21st, I'm going to make my minimum payment, a $30 payment. Whatever you can pay. If it's the minimum payment, that's perfectly fine. If you can pay more, pay more. This is going to boost your score even more. Okay. And that also, and like I said, we're manipulating a computer system here. Okay, if people were looking at this every day, they're like, okay, we know she's just doing that because she wants to boost her score. Okay, but even then, it's still going to show that you're dedicated to your card. You're creating a certain type of relationship, right? You're creating some type of, you're giving them some type of incentive that you're going to stay with them and you're going to create that relationship. So either way, we're manipulating a system that just checks data points and just looks at it, doesn't move with emotion, it doesn't move with bias. So we have to learn how to break the system. Okay, so just doing little things like that is going to boost your score detrimentally, right? Whatever the word is, I don't even know if that's a word. But so the next thing you want to do is don't use your car while you're paying it down. If I just made a $500 payment on my credit card, I don't want to keep using that card, okay? Because it's not really going to matter if I just made a $500 payment and I know my utilization is going to go down to 30% or even 10%, and I keep using that card. It's going to get reported when it gets reported. Like, say I do it before the statement closing date, it's still going to get reported. But even then, I'm still setting myself back. Okay, so wait till it posts. Wait till the payment actually comes out of your bank account, your debit account, and then you want to start using your card again. Okay, so don't use your card while you're paying it down. Don't use your card for things you don't have money for. If I take a credit card out for $10,000 and I know I don't have $10,000 cash and I max out the card, you're going to set yourself up for failure. Okay. So one thing I want to say is when we're talking about credit utilization, we're talking about discharging debt, right? Discharging works best for closed accounts. They work best for collections. This is where it's not affecting your report. Okay. And if you don't know how to do it properly, it can slow things down and affect your score. This is extremely important. So when we talk about credit utilization, right, when we talk about you creating a certain type of payment schedule, This is what's going to be most important when we talk about the removal process. Okay, so if your credit utilization isn't good and you still go get these things removed, it's not going to matter. This is one of the biggest things that lenders look at when they are going to either approve or decline you. Okay, so when we talk about credit utilization, it always is going to matter. It always matters, okay? So the next thing we're going to talk about is credit age or credit history. So how can you manipulate your credit history to boost your score or to look sexy to the lenders? You're going to become an AU, authorized user, card, or do anything on the card as I'm the just okay. So what is the AU? Authorized user is someone who is you're going to put on your credit. So what is an AU? Authorized user is essentially someone who is going to use the credit card as the primary card holder, but they don't legally have the responsibility to make the payment. Okay. So if I have a good payment history and I'm put somebody on as my AU, it's going to report just to their to their consumer report into the bureaus just as it reports to mine. Now, if I have late payments or anything like that, it's still going to report to the authorized users report just as it reports to mine. The only difference is they are not legally responsible to pay for the card. Okay, so that's what an AU is. So when you're an AU, number one, you want to make sure you're being an authorized user to someone who has great credit or good history. They always pay their bills on time. And you also want to make sure it's an old account. Okay, so that's one way to manipulate your credit history, right? Because like, I always tell people this, right? Good credit history is good. Bad credit history is okay. No credit history is horrible. This is one of the biggest things that lenders look at. If they look at you and you're asking for 50 bands and they're looking at you like you've never had 50 bands in credit. How can I know you are educated enough to understand how to use this money or what is going to come with me giving you this money? Now, if I like, let's just keep a scenario here, right? If I'm a newbie and I'm asking for 50K and I've never had 50K, are you going to give it to me or are you going to give it to someone who's had 50K or has had multiple credit cards, who has had credit open for at least 20 years, right? You're going to most likely give it to the person who's already had some type of credit history, right? You're not going to give it to the newbie. So when you don't have credit history, you're going to automatically get lower limits because you're going to get things like starter cards, starter grants, right? You're going to get things like startup loans. Everything's startup and it's automatically going to take you from getting the high limits to the low limits, okay? So that's extremely important. Another thing I want to talk about, when you're an AU, when you're an authorized user, make sure it makes sense on your credit report. What do I mean by that? If I go ask my mom to put me on her credit report and she has one for Capital One and it's been 30 years since she's opened that account and I'm only 22, when lenders look at that, they're going to know, oh, this isn't really her credit. She's an authorized user. But that doesn't mean that you can handle that money. Okay, so make sure it makes sense. You can open a closed account, which is very important. One thing a lot of people don't talk about this. You can open a closed account. So say I went and got a starter card with Wells Fargo, right? Say I went and got a starter card. I had it for a couple months. Once say they started with 0% interest, 0% APR for 12 months. After that 12 months, I said, okay, I'm going to close this account. I'm going to move on to bigger and better products. Okay, so you can open that closed account back up, and that not only automatically is it already reporting as credit history, but you can open up that closed account, and that's automatically going to boost your score, right? So old accounts are worth more than new accounts. Okay, that's extremely important when we talk about opening up closed accounts or become an authorized user or even buying primary trade lines, right? So old accounts are worth more than new accounts. If you have, bad credit trade lines, it's not going to work. Okay, so that's what I talked about. If you want to be an AU, you have to make sure that the person that is putting you on there as an authorized user, that they have good credit or they have, the type of credit that you're looking for, right? And that all comes down to understanding what the banks want. Okay, so next thing we're going to talk about is good credit mix. A good credit mix is extremely important, again, when we talk about what the lenders want. Okay, so adding the right accounts is extremely important. So if you have only installment loans, say if you only have a car installment loan, you have a mortgage loan, or you say you just went and got the new iPhone and you signed a contract with T-Mobile to where you're paying installments on the new iPhone, okay? Say you have only installment loans, then you want to go get things like credit builder loans. You want to have a good credit mix. What did I talk about? It's all about your relationship with credit. So if you have a good credit mix and you can show the lender that, hey, I'm paying my car note on time, I'm paying my mortgage loan on time, my utilities and my bills, my phone bill, everything gets paid on time. I can handle the money that you're going to give me. This is what the lenders want to see. The more diverse and the more healthy your credit mix is, the higher your score, and aka the higher limits you can go ask for. Okay, so a good credit mix is extremely important. The next thing I want to talk about is credit inquiries, right? 10% of your score. This is made up of 10% of your score. So is your credit mix, right? These are small things that get overlooked a lot, but they are what the banks want to see. Okay, so the banks want to see good credit mix. They want to see that you can handle your bread. Okay, they want to see that you have great payment history, which is extremely important. They want to see that your utilization is under a certain amount, right? I believe your credit utilization is 30%, payment history is 35%, credit mix or your credit age or your history, that's going to be around 10%. And now we're moving on to inquiries. Inquiries about 10% of your score. Now, credit inquiries are so small, they only makes up 10% of your score, but it is extremely important when we talk about what lenders want to see. There's two types of inquiries you're going to have. You're going to have a soft credit check or a soft inquiry, or you're going to have a hard credit check or a hard inquiry. Now, your soft inquiry is something that is not going to impact your credit score. Okay, so those soft inquiries are most likely going to be for employment background checks, when you're trying to check your own credit, like I was talking about earlier, or even for pre-approval processes where you go apply for a credit card and they say you can apply for this credit card, go through the pre-approval process, and you're going to see whether you're approved or not without any effect to your score. That's going to be a soft pull. Now, when we talk about hard credit checks, those are going to be typically when you apply for loans, credit cards, other forms of credit without going through the pre-approval process. You want to do this strategically, right? So when you are thinking about going to apply for things that require a hard check, which is things that are going to affect your credit score. Hard checks affect your credit score, soft checks don't. Okay, so when we talk about hard checks and hard pulls, you want to do a few things. You want to avoid multiple inquiries in a short time. So if I'm going in a 3-month period and I go ask 10 banks every month and I have 30 inquiries on my report, that is going to be extremely bad. That is going to be one of the biggest reasons that you're going to get denied for funding. Why? Because you look desperate. We don't want to look desperate. Okay, that's why credit mix is extremely important. When you start adding these things together and you make it all look sexy, credit mix and inquiries are going to be one of the biggest reasons why you're getting denied. Now, it's a small part of your score, but it's going to be one of the biggest reasons why you're getting denied. So inquiries are extremely important. So you want to avoid multiple inquiries in a short amount of time. Okay, so don't look desperate. I think one thing I would love to say is, especially when we're talking about what type of institutions you want to go to, depending on what type of products you want. So if we're talking about what type of sequence you want to get your credit cards in, I would recommend going to Chase first because they have I believe I forgot, I think it's the 2 to 24 rule, something like that, to where you can only apply for them to get, and they have great products, right? So you want to be strategic when you're doing this. When we're talking about what type of products you're going to get and what type of loans you're trying to inquire, you have to understand what sequence you want to go in. So, when we talk about Chase, they only allow you to get around 2 credit cards with them in a certain amount of time. So what do you do? How do you manipulate that? You want to do credit inquiries in the same day. How do you do that? We call this credit stacking. So I can go to 2, maybe even 3 different type of institutions that pull from different bureaus. And in some cases, I can have my laptop here, I can have my cell phone here, and I can have my desktop here, and we can have 3 different credit applications pulled up. We press submit at the same time. That's only going to be one inquiry. Okay, so I'll talk about, that's a whole nother rabbit hole. But there's certain type of, like I said, we're beating the system here. So you can do certain type of things so where you can manipulate it and you can take you going from applying for 6 banks and it can only be one credit pool. You can go into one institution and apply for 3 credit cards. Like I said, have your desktop here, your laptop here, and your cell phone here, and you can go apply for 3 products in one institution, and it's only going to be one credit pool, right? So multiple types of inquiries is what you wanna do in the same day, but you want to avoid having multiple inquiries in a short amount of time. Okay, so multiple types of credit in one time can dwindle down the value. What does that mean? So if I'm taking out 5 credit cards in a month and I don't get those inquiries removed off of my report, and then I go apply for another one, it dwindles down the value of the credit cards that I already have. Then this is going to make the lenders think, okay, she's desperate for bread. They're not going to give you bread out of desperation. They're going to give you bread when they know you can handle it. Your credit score is essentially your report card in a way, right? It's going to be, because these people don't know you. These people don't know whether you can pay for it or not. But what they do know is they can send you through a system, and that's going to, whether it's going to determine or, it's going to confirm or deny whether you can handle these funds. So these people are not going through your credit. These people are not getting up every day, going to work, going through your credit report point by point and checking it off, saying, okay, this is where. No, you're going through a computer system. Okay. I believe it's called e-Oscar. We'll talk about that another day. But once you go through e-Oscar, you're gonna have to check off certain points. And like I said, once you check off, say it's 10 data points, and they're talking about credit mix inquiries, they're talking about payment history, and you check off every single box, you're gonna get approved. If you don't, you're gonna get denied, right? So it's all about manipulating things, right? So when we talk about inquiries, they will fall off at the same time, right? So when you apply, don't always register the same day. Sometimes inquiries can take up to 24 hours to hit your report. I've seen inquiries take up to 30 days to hit your report. Okay, so always do pre-approvals. That's one thing I want to tell you. Always do pre-approval because they're soft pulls, right? They're not going to essentially affect your credit score. So when we talk about inquiries are one of the biggest and easiest things you can get removed off. You can essentially just call up to the credit bureaus or the consumer reporting agencies, and you can just tell them, hey, this is fraud. I'll leave a free template down below to where you can tell them exactly what they need to know according to the Fair Credit Reporting Act, and they most likely will take them off in under 24 hours, right? So that means I can go apply for 5 credit cards, and I can get all those inquiries taken off, and I can go apply for 5 more. As long as you get them taken off and you don't look desperate, you don't look like you're just trying to get money and get money and get money, this is going to make you look really good to the creditors, right? That breaks down the credit score. We got inquiries at 10%. We got credit mix or credit, your credit mix at 10% as well. You got your payment history at 35%. You got your credit utilization at 30%. So next thing we're going to be talking about, because we talked about breaking down the credit score. You know how to break down your credit score. You know what the lenders want to look for. Now let's talk about why it's important to break down your consumer report. Now your report is made up of 4 sections. Okay. And I'm going to pull up a sample credit report, and I'm going to break down all 4 of these sections and why you need to understand what is in each section, what you need to attack first when it comes to the removal process, and how you're going to navigate this and why it's important, right? So let's dive into that. All right, y'all. So I wanted to get a sample credit report here so that you guys can see what it looks like. Okay, so now, this is just a sample credit report. This is essentially what your credit report, every single credit report you're going to have this is what it's going to consist of. So the first section we have is your personal info. Okay, this is where you're going to find your name, your addresses, date of birth, employment history, your social security number, any type of people you have that are, okay, so this is where all these type of things are going to be, right? Your address is associated with your credit profile, right? Where you used to live, any names you have associated with your social security number, all those type of things are going to be here. Now, why is this important to understand? Okay, so why this is important to understand is because you want to make sure this information is accurate. Okay, so say this isn't where I used to live, right? Say this isn't, say it's a wrong address, it's not where I used to live, and say this person on 1475 Main Street, say they took out a credit in my name, and then they say they defaulted, right? And it went to charge-offs or collections. And now this is getting reported to my stuff. Okay, so there's certain type of things like that. You want to check for incorrect information. You want to check for unverified information. Okay, so why does this matter besides that? Okay, this is going to matter when we talk about the dispute process. So say I send Experian a letter, and I still have this address connected to my profile. Now, if you want to get those removed, you want to take these off. Why? Because if I go to your credit report and I say, okay, she sent the letter, she's saying that this is unverified information, this is not her information, but on her credit report, on her consumer report, this address is associated with her. Okay, automatically it's going to come back as verified. Okay, so there's certain type of things you want to use, or there's certain type of things you want to keep in mind when you're looking at your personal credit report. Okay, so once you can break down your credit report, you can essentially know how you're going to attack, what type of laws, what type of dispute laws you're going to use, what type of consumer laws you're going to use. This is where this matters. Okay, so next part we're going to talk about is your positive, negative, or your potentially negative items. This is essentially going to be where your payment history is. Okay, so potentially negative items like those late payments, the collections, the repos, charge-offs, whatever that may be. So this is what you want to look at the most when you're talking about your consumer report. Okay, so this is what you want to look at the most when you're talking about your report, your potentially negative items. Okay, this is where you're going to see things that are going to be open. You're going to see the data, the status, right? First reported, your responsibility. Now down here, you're going to see the history. Okay, so usually when it's in green and it says okay, this means you're going to have positive history. Now, if there were to be something red, now let's see if there's one down here. No, there's not. Okay, so let's say in March, this is going to say red and it's going to say late. Okay, so that's when you're going to have like a late payment. Okay, so when you see the status, it's either going to say current, it's going to say closed, and it's going to say who closed it. So if it was closed by you, it's going to say closed by the consumer. If it was closed by the creditor, it's going to say closed by the creditor. Okay, then you have things like inactive, but they're going to say never late. Okay, so there's certain type of things that you want to look at. Okay, the first thing you want to look at is the status. Next thing you want to look at is the date opened. Okay, the next thing you want to look at is your account number. Okay, you want to look at your account number because you're going to need this in the dispute process. Okay, so let's say in 2013 in December I get a late payment. Okay, so what I want to look at is where it's going to be reported. So what day is it reported? And you want to look at, say, so this is an Experian sample credit report. So the next thing I will do is I'm going to go to TransUnion. I'm going to check that credit report. I'm going to go to Experian and I'm going to check that credit report. And if these dates and these statuses don't match up, automatically you know how you're gonna react. You're going to say this is unverified information. Please remove it if it's not verified. Okay, that's one way. That's just a quick example of how you're going to use your credit report to start attacking these things, right? So that's extremely important. So next thing we're going to talk about is accounts in good standing. So this is going to have all your revolving accounts, your installments, your mortgages, car payments, etc. All your good payments are going to be posted here. Okay, the reason why you want to look at this is another way you can start comparing and taking notes, right? So if I have this account number and the recent balance is 616, I'm going to look up here and it say this was, ballpark. Okay, so the next thing you're going to want to look at is your accounts in good standing. This is going to be your revolving accounts, your mortgage, your car payments, everything that you have positive or in good standing. When the status says current or anything just anything you have in good standing, anything you have positive payment history on, this is where this is going to be, right? So again, you're going to look at your account number, the recent balance, the date opened, your current status, right? And you're going to be able to understand what they've been reporting to these accounts, right? So this is where you're going to essentially find all of your positive payment history. Again, you're going to use this and you're going to match it up with the potentially negative items. And this is how you can start from doing factual disputing, right? So this is a quick way to just look and see if everything is verified. If everything's not verified, if you have, say on Experian, they say in December you had a late payment, but on Equifax it says that it was paid, or it says that the account is closed or it's inactive, right? And those are certain type of things you want to start looking at. So studying your credit report is extremely important, right? The next thing we're going to talk about is your credit inquiry. So when you scroll all the way down to your report, again, this is a sample report. This is exactly what your credit report is going to look like. Exactly. But when you talk about your credit inquiries, right? Who pulls your report in the last 2 years because they roll off after 2 years, okay? So these are soft pulls and hard pulls, right? These are where all these type of things are going to be at. So when we talk about your credit inquiries, right? This is where you want to start attacking first, okay? Here's one thing I like to tell people. It depends on what your report looks like, okay? If you have a bunch of inquiries, I would, essentially say attack the inquiries first because they're the easiest to get off. If you have a bunch of late payments, I would say start with the late payments because those are the hardest to take off. Those can essentially take up, that can take longer for them to respond, essentially, or for longer for them to take those things off. They're really hard-headed when it comes to late payments, okay? But when we talk about your accounts in good standing, when we talk about your potentially negative items, and your personal information. You essentially want to get your personal information cleaned up first. Anything that's not current has to be taken off. Okay, anything that's not current has to be taken off. Then you want to move to your inquiries. Like I said, if you have small things, little things that you can take off, if all you need to work on is getting your inquiries taken off, call them. Don't send any letters. It's going to take too long for them to get there. Okay, so inquiries are one thing that you can attack immediately. Okay, same thing with your personal information. If I say, hey, I don't know why this is here, but my name, I don't want this John Consumer. I don't want Jay Consumer. I just want Jonathan Consumer. Okay, you don't want 5 or 6 names on here. That's going to set you up for failure. It's going to set you up for fraud. You want to make sure everything is confirmed and accurate. You also want to make sure everything is up to date. Okay, so that's extremely important when we talk about what your credit report consists of. Okay, so here's what you need to know. Your late payments, number one, are most detrimental. What lenders look at the most are going to be your payment history, your credit history, and your inquiries. Okay. Why do they want to look at your payment history? They want to know how disciplined you are with your money. Why do they want to look at your credit history? They want to look at your credit history because they want to know how are you a rookie or are you someone who is more seasoned and able to handle the money, essentially what it consists of. And they look at your inquiries because they want to see how desperate you are for funding. So what you need to know is, as a consumer, we have the power to control who sees our non-public personal information. Okay. And we have to take back the power. And when you understand what your score looks like, what affects your score, and how to understanding how to read your credit report so you can understand how to attack these things, you are going to be on offense instead of defense. Okay. So you want to create that healthy and structured financial system. Okay, that's going to ensure that you have no late payments. That's where you practice things like paying your bills first and doing the pleasure second. So that's going to, when you're not so desperate for income, right? And you know that you want to be strategic when you are filling out credit applications, you can know you don't want to have no excessive inquiries. You know, you want to attack the charge-offs and the bankruptcies, all that after you attack your addresses and phone numbers that are going to be linked to these charge-offs and these bankruptcies, right? And that means more than you think, okay? So why does all this matter? Why did I just talk to you guys about all this? Because you want to be a worthy borrower. You want to be someone that these banks are competing to give money to. So you have to want to look a certain type of way. Like I said, this is your report card. Okay, if they know you're passing this subject, they know you passed this test, they know you passed this test, they're going to move you on to bigger and better things. Just like if you have a credit limit and you can show them that you can show them that you can handle that money, they're automatically going to give you more. Okay, so that's where the real money is. That means lower interest, lower down payments, and higher limits. That's extremely important. So this process, again, this is not, legal advice. This process isn't automatically, guaranteed when it comes to the timelines. You have to be patient. You have to stay consistent and stay focused. Okay, this is the only way you can truly use your power as a consumer. Why? Because if you don't intend on going the full process, if you start with if you start with the dispute process and you don't have any intention on going to the administrative process, where you talk about, okay, if you don't remove these things, I'm going to report you. And if I report you and you still don't remove these things, then I'm going to move on to suing you. If you don't intend on going through that full process, don't even try to start disputing. Okay, because if you don't stay consistent and you don't send your letters or your complaints in the right order or in the right time frame, if you wait 3 months and they have 30 days to respond, then you're essentially going to have to start over. Okay, so you will have to start over if you don't do things in the right time frame and you don't stay consistent and patient. And you're either going to have to start over or they're going to come back as verified and they're just going to be like, just send them another letter. They're not really serious about doing it. And if you keep just sending letters and they keep just sending them back as verified, you're not really getting anywhere. Okay, so you have to be on offense instead of defense. Okay, and once you put them on defense, they're literally going to have to remove these things. When you start using consumer law, they're literally going to have to remove these things. And if they don't, they want to keep sending it back as verified and they want to not validate your debt and they don't want to tell you and they're in dishonor, then you have to take the power and say, okay, I'm going to hold you accountable. Okay, so don't care so much about your credit score, care about your credit report. That's the biggest thing that I want you guys to take away. You know what affects your score, you know how to shape your score, and you know what you have to do to make your score look sexy and to where okay, I can't have any late payments because that's going to hurt me extremely bad, right? And I don't want to have too many inquiries. Okay, if I just took out this credit card, I might not want to, unless you can get them removed. If you can call up there and get them removed quick, which you can, which is extremely easy, and you can do that, then you just know how to move, right? So if I know I can get these credit inquiries taken off quick, I'm gonna know, okay, I can go apply for 5 or 6 credit cards in the next 4 or 5 months. If not, then okay, you only want to apply for credit every 3 to 6 months. Okay, that's essentially the type of time frame you wanna follow when we talk about understanding. You want to be on offense. You want to stay a couple steps ahead of them. You don't want to be on defense where you're like, okay, now I got to pay $1,000 for credit repair. Okay. And even if you do get to that point, this is what's going to empower you, because if you know the information, you're not going to have to go pay a band. And if you feel like you want to do that, you don't have time to do it, you still know the process, right? And you know what your rights are. Okay. So don't necessarily care about your credit score, care about your credit report, right? So where can you get your credit report? You can get your credit report from a few places. You can get it from annualcreditreport.com. You can pull that, you can get it for free once a month, or you can try one bureau at a time every 4 months. So there's a few different ways you can do that. Always check your score regularly. Attack things regularly. Like I said, if you can pay it, pay it. If you can send a Goodwill letter and work with them folks, if you say you've had a credit card for 5 years and you're just in a rough spot in your life and you need them to give you a little leeway, send a Goodwill letter, okay? Or just pay off your debt, or don't ever pay late payments anyway. Okay, so there's, a few different ways you can attack this. It all depends on what works for you, right? This is not a cookie cutter type of video, right? This is all about, I'm giving you information and you have to, figure out how you're going to use it, how you're going to utilize it, right? So that is going to cap off day 4 or day 3. This is considered day 3. I missed my episode yesterday, so this is considered day 3. We're talking about breaking down the consumer report, how you can manipulate the system and boost your score, right? I hope you guys took a lot of notes. I hope you guys got some value from this. If you did, drop a comment below. Tell me how you feel. Tell me if there's some things I could have done better. Tell me if there's some things you think I missed. Tell me if there's some things you want me to dive deeper into. And we're just going to go from there, right? It's KDK Capri out. All right, y'all. So that officially capped off day 3 of the Credit and Entrepreneur Empowerment Challenge, where every day for the next 30 days, we are going to be coming with empowerment. We're going to be coming with some knowledge. We're going to show you how to fight against the bureaus and take the power back as the consumer. Okay, so today we talked about breaking down your credit report, what you need to know, what you don't need to know. And if you are looking to dive deeper into why we haven't been taught this, and you want to learn about what credit is and how you can utilize it, click the link below. You can get the Credit Miss 101. It's $10. It's basically a free ebook, right? You guys can go and learn about how credit works, how debt works, and how you can utilize it. Next, if you want to pull your credit report, you're in the process where you want to start analyzing your credit report so you can understand how to start attacking those negative items or those inquiries or whatever you need to attack. You can get a 7-day free trial for My Free Score Now, and you essentially can, just look at your credit report, break everything down, write down. You can start understanding what you need to attack, right? So if you want to get a 7 free day trial, click the link below, and we just gonna keep coming with the sauce every single day. All right, I hope y'all enjoyed this episode. My name is KDK Capri, the mentor, the mentee.